All right, what's going on, everybody? Happy Wednesday. Let's jump into it. Not a lot going on necessarily. There was, some economic data that came out today, and it was certainly some weak data. Um, uh, we'll have lots more data coming out on Friday, I believe, is the NFP print on Friday, which will be very important. But basically, the what had happened today is, on some very weak data and strong selling, this was all bought, showing that there's still plenty of demand in here for stocks. Now, hedge funds are at a crazy level of short positions on here. Um, do, do, do. Yeah, so they've increased short exposure to ETFs, around $218 billion worth, and also $948 billion worth in single stocks, which would represent the largest monthly increase in ETF short selling in more than 10 years. Um, so take that what you will. Now, uh, things are at a peculiar level, and there's lots of sort of conflicting data on the direction that we're gonna move towards in the short term. Um, More medium term, we are in a uptrend. Um, and so we'll see if that can hold or not. I do not personally believe here is the time to get greedy. I may close out um, my NASDAQ call options tomorrow or so. I like I said, I don't think now is the time to get greedy. Um, so we'll jump into it. So yeah, I'm still in the TQQQ leverage Nasdaq fund calls. Those are July 18 is the expiration, $70 strike price, 670 is what I pay for them. Those are currently 8, so those are performing well. Like I said, there's still demand in here, even though institutions are at massive levels of short positions. Um, so, if the selling would have continued here today, I would have basically closed out the NASDAQ position. But, I mean, the demand was there during the day. Um, like I said, I don't think now's the time to get greedy with any sort of positions or anything. And it's sort of the same textbook that we've been trading for, a month or so at this point. Smaller size, smaller gains, not really holding for any breakouts. So the more I look at this, the more I think that same playbook should be used. Now let's move over to some other things that really aren't working. That's giving me a little bit less conviction in this market in the short term. Things like Bitcoin. It's sort of turning over. Now, again, this is still completely fine. No sell rules have been broken, other than the fact of after this pullback, a bounce off the 21-day moving average, and all that strength during that day got completely sold, and it has trended lower ever since. That is never a good sign. I am much less enthusiastic about this in the very short term. I still have those calls on. Those are IBIT. August 15 is the expiration, $61 strike price. Average paid 485. Those are currently 455. So, you know, again, I mean, no sell rules are broken here, but it just doesn't, you know, look that good or that strong. You know, when an asset is very strong after a large move up and then, you know, the initial pullback to, you know, the 21-day moving average is usually a good indicator of sort of a mean reversion trade. You want to see that asset moving off of that level pretty convincingly, not moving off of it in a convincingly manner like we saw and then for it just to get sold, right? So that's not a good thing to see, in my opinion. Like I said, and there's, you know, no sell rules are broken in the short term. But yeah, just, you know, a little bit like, is this rolling over here? You know, it's tough to tell. NASDAQ right at resistance levels, right around 20,000, you know. So it's sort of in a strange place to, I don't think is the time to get aggressive or greedy like we were talking about earlier, or playing for breakouts. So we'll see what happens tomorrow and the rest of the week in these. Now let's go over Argentina. So Argentina is down 3.3% today in this ETF, and that's a huge move for an ETF, right? So, so the calls that I'm in here are getting smoked. But again, like I said yesterday, I want to give this every opportunity to work. I want to give my positions as much opportunity as I can for them to work. However, given some sort of weakness in Bitcoin, as well as some sort of suspect levels. I don't want to call it weakness in U.S. equities because it's not weakness at all. It's just at a level where it's going to be difficult for it to break out of at this current level. Makes me more skeptical about holding these, but you know, we will see what happens with these at the end of the week and see what needs to be done there. So Palantir, another one. So now equity positions, super weak, but then rebounded, right? So again, it's sort of similar to how this day was. It's super weak. I don't know how much this was down at one point, maybe 5% or something, right? So 5% down in this, you know, in a morning. It's pretty sizable. Now, this was all bought, but not in a convincing way at all. Again, you know, no sell rules are broken here. But again, you know, yesterday we were talking about how this is just limping out, and limping out to all-time highs is never a good sign. So, you know, whatever, still in those, 126.67 is average cost basis. Now we're going over to some longer term holdings. GTX, I don't know if it's worth mentioning or not. I'll be in this one for a long time, so whatever. Average cost on those $10.95. Moving on. Waste management, yeah, see, you know, just, I don't know, pretty indicative of things, right? Like you know, things start making new highs and giving ground back is never a good sign, especially where indexes are at. So lots of these things are starting to add up to say play a more cautionary tale in the short term moving forward. So those are all the positions that I'm currently in. And given the more cautionary tale narrative, is gold looks pretty good. It's maintained its uptrend. It you know, shoot, it looks pretty good. You could argue this is a flagging pattern that it broke out of. So there's another thing to go into the cautionary tale hat. So, okay, so that's that. That's it for the positions. I don't really think this video is going to be that long because there's not really much going on. Let's go over some indexes. So we went over NASDAQ, so Dow was super weak today. Very weak. Very, very weak. Let's look at this on intraday chart. I mean, just got completely sold off, really hard. Wow, terrible close. That's not good to see right around this 200-day moving average, right? So again, we're at that level. Like, what if things start rolling over here off the 200-day moving average? That would not be good. Let's see what other time has something looked kind of like this and started rolling over. We can go back to this area right here in 2022. Sort of same thing, right? Come back up. Is it going to be rolling over, and then just got completely blasted? So, again, just be cautionary. See, NASDAQ, you don't want this to really start rolling over here per se. It certainly can and still be fine. Yeah, it can and still be fine. We'll leave it at that. The volume will be a clue. And so we'll just wait and see what kind of volume we get on a pullback or, if one comes here in the short term. See, I mean, again, you don't want things to start rolling over in this whole level right here, But again, it can and still be fine. The volume will be the clue. So we just need to look out for volume. Again, I don't think this is a place to get aggressive or greedy. I may actually just start taking off most of my positions here. So now Russell, I don't know. Yeah, see, common theme where this is not an area where you want to see things start rolling over and selling starting picking up on heavy volume. Like I said, institutions are very short equities, and so the demand will certainly dry up if things start moving to the downside. If things start moving to the upside, it could be a fantastic rally. If that happens. Let's look at mid caps here. Yeah, I don't know. I don't really have much of an opinion. So that goes into the be more cautious ideas. All right, now let's jump over to Mag 7. We'll start with Tesla, I guess. Wow, 3.5% down. This looks like a pretty decent spot to try this. What the heck? I have no clue. Okay, there we go. That's crazy. Decent spot to try this. I would wait for confirmation of things, moving out and turning up. But, you got the stochastic down here in the 20s. RSI is going to come down, around 50. It would be cool to see, like a open below this area and then close above it. That would be a good thing to see. But again, I don't know. This is still, I would personally be a little bit patient with this and not jump the gun or rush into anything here. Is that a weekly close all funky like this? Yeah, what do they call that? Like a hammer candle or something? It's bearish close, that's for sure. So yeah, just be patient, wait on this one. Let's go over to Microsoft. Again, sort of the same. Microsoft just kind of limping. sort of some weird price action, and I would be cautious in here. So you got, be cautious. That's the whole theme thus far of this. With everything that I've seen so far, it's showing to stay cautious. Meta rocking and rolling today. So, clearly this one's looking good. Let's look at Netflix. Netflix making all-time highs. That's great. So these two things, they're good. But see, super light volume, though. Let's see the volume for today for Meta. It was good volume. All right, let's go over to Google. Google looks okay. Google's not in any sort of defined trend. But this looks okay. I would use the 21-day moving average as what you're risking on this one here. So three points here. So, it just looks all right. Let's look at NVIDIA. It looks okay. Oh yeah, SMH semis looked pretty good yesterday, and today they're performing well. So there's something for the bullish camp. Let's look at Taiwan Semiconductors. Wow, 2%, awesome. Let's see how AMD is performing these days. 1%. Yeah, I don't know. This looks okay. Like if this was above the 200-day moving average and it bounced off the 200-day moving average, I would say this would be extremely bullish. And it still very well could be a very bullish bottoming pattern in here, but I'm less enthusiastic about this, that's for sure. But obviously, certainly can work out. I don't know. Looks all right. Looks okay. So okay, now let's go over some sectors. We'll go over real estate, and then we'll go over bonds. So you have the real estate sector sort of rallying today as yields were dropping today. And overall, I still believe that bonds, it would be a good thing for equities if bonds could start trending up. Now, nothing crazy, but I'm still in that camp that it is a bullish thing for equities if bonds can start moving up from these levels. So my opinion from yesterday on this has not changed. We'll see how things are next week. Again, we're in sort of a coin flip sort of area. So it's hard to make real aggressive directional plays here. It's hard for me to have a strong opinion one way or the other. I have certainly plenty of exposure, nothing very aggressive, but plenty of exposure. I have added exposure, but we'll probably take some off, honestly, just because it's, I don't know what I'm risking in lots of these positions, right? I'm not going to take this down to the 21-day moving average. There's no way I'm taking my NASDAQ calls down to the 21-day moving average. So then what am I risking? You know what I'm saying? Does that make sense? It's hard to know what I'm risking at this exact moment from here. That's sort of the spot. It just goes back into the cautionary hat. So, all right, moving on. That's enough of that. Let's look at biotech. I don't know. I don't have an opinion. Healthcare. I don't have an opinion. Shoot. It's performed terribly. Wow. Oh, shoot. Let's go back over to financials. Yeah, see, this is not going to be good if things start rolling over from here. All right, now let's look at some random single stocks here. So let's go through some of my list here. So Uber, I don't know. I don't know. Let's look at Take Two. I mean, it's not bad. Let's look at Caterpillar. Oh shoot, let's look at industrials. Made a new high and gave it back. Yeah, so again, those things are just not a good sign. Let's look at Broadcom. I think Broadcom has earnings coming up here soon, and I mean, this is in some stretched territory here. So, watch out for that. Let's look at Spotify. Wow. This is fantastic. That looks really, really good for Spotify. Let's go over to nuclear stocks. Yeah, I mean, it's not that this looks bad at all. I just want to, start a position here. Oh, shoot. Let's look at SoundHound. Oh, boy. This does look like a pretty good spot to go after this for, a short little 3-day trade here. But the way indexes are behaving makes me skeptical on this. And that'll probably be it. Let's look at Shake Shack. Yeah, just no trade really to be had. I mean, but this is performing okay. So I guess, that's really it. There's not really much to talk about today. I think next week there'll be plenty of, stuff to talk about. Yeah, see, like gold's still performing pretty well. Jeez. Yeah, so yeah, I don't know what else to say. Let's see silver here. See silver. Strange sort of little uptrend going on. Just be cautious, chill. I really thought this week was going to be a lot better than it has turned out to be. But such is life. I thought last week was going to be pretty good too, but it was pretty mellow. I'm not trying to get aggressive, not trying to force the issue on anything. And that's it, you guys. So I'll catch you all later.